For those of you who are watching this video on Facebook Reels, visit bit.ly/algowealth to watch the full video. All kinds of experts are discussing at which point the S&P will bottom out. Bottoms are ranging between 3,000 and 3,378. At this point, one truth is staring at us in the face. The Fed will not stop raising interest rates until inflation drops. The next inflation report is on October 13. One thing we can say for sure, inflation was last at 8.3%, and it has a long way to go before it really starts falling and appeases the Fed. A big consolation is that US gasoline futures are trading at an 8-month low. The Fed has now raised interest rates to 3% this year, and we see at least 3 more rate hikes totaling 1.5% if inflation stays above 8%. While we are waiting for inflation to drop, something could break, Morgan Stanley warns. And this, in our opinion, could cause the Fed to temporarily abort rate hikes. Now, why are we saying this? The US dollar has hit 20-year highs against foreign currencies, and Morgan Stanley says that such dollar strength has historically led to some kind of financial or economic crisis. This is very important to note. Morgan Stanley sees the dollar index climbing to 118, which is a further 3.55% from current levels. A strong dollar makes imports cheaper, which is not only disinflationary, but also puts pressure on profits and raises questions about how much the economy can sustain until something goes wrong. Investors, please take note. What is amazing this time is that this dollar strength is happening even as other major central banks are tightening monetary policy at a historically hawkish pace. The good news is that this huge dollar strength is pushing the stock market into a bottoming process. Morgan Stanley estimates the S&P 500 will need to be in a range between 3,000 and 3,004 for the floor to hit and set the stage for a turnaround. The high end of this is an 8% decline from the market's close on 23rd September. To give you a complete picture, Citibank is closely watching the 3,650 level for the S&P. On Monday, 26 September, the S&P briefly traded at 3,644.76, which is actually common behavior. It always drops below key downside levels before it snaps back. Now, Citibank still thinks earnings will be resilient in the third quarter and expect the S&P to rally to 4,002 in the fourth quarter. JP Morgan's Marko Kolanovic still says that a market bottom is close and that stocks are extremely oversold. Now, whatever the analysis from these experts, we have this to say. If you are holding stocks, this is not the time to cut loss. This is the time to hold your positions and to buy the US dollar on any weakness or establish a stocks hedge so that you save some money when the market is trying to find a bottom. So that means while the market is trying to find a bottom and weakening, it is good to be long the US dollar or a stocks hedge so that you can make money short term. If you're not holding any stocks, this is the time to prepare your wish list, not short the market, and perhaps buy the US dollar short and a stocks hedge short term. While the market is dropping, prepare your wish list and buy the US dollar and buy a stocks hedge so you can still make money in the short term. Now, here is why. This is why we say this. Historically, the S&P has not traded between 14 to 15 times forward earnings, and currently it is trading at just under 16 times forward earnings. In fact, if you remove the heavyweights such as Apple, Microsoft, Alphabet, Amazon, and Tesla from the index, the rest of the index is trading closer to a 14 multiple, with the equal weighted S&P trading around 13. Investors, take note. The median stock in the market right now it's in the region of fair value, even as the earnings path looks challenging. At the end of the day, it is all about positioning. And despite the volatility that we have seen since March 27th, we have this to say. We are living in exciting times where, if done correctly, there are opportunities waiting, and there's money to be made over the next 12 months. If you want any guidance, contact us at bit.ly/algotrader and subscribe to our YouTube channel at bit.ly/algowealth.